The ProACT Know-How.
Hi, this is ProACT Sam. Welcome to this episode of Living and Working Abroad. The most important thing for expats when they're relocating abroad is to make a will. Isn't that bizarre? But you should protect your family and your business. When you relocate abroad, you look at your income, you look at your assets and how to protect those in the future. You might be relocating to a country because it's got a lower tax regime, or it doesn't tax working abroad from that location, or it could be that it suits your pension income to give you a lower tax rate, like Cyprus offers a flat rate 5% tax for pension income, or it could be that it just frees you up from IL35 constraints working as a contractor for UK companies, or it could be that it's freeing you up from capital gains when you're selling property or financial investments like Bitcoin. So all those issues when you're relocating abroad are all opportunities for you to plan ahead to protect your family. And we look at those and we say, what do we need to do to satisfy the residency requirements? What do we need to do to satisfy the requirements for tax, to pay less tax? But it's also about packaging it so we protect the family if somebody dies, or there's a capital gain in the future, and avoid that tax liability. UK expats relocating abroad still have got a liability to 40% inheritance tax on their worldwide income. That's 400,000 on $1 million. But there's also every family, every business on death has got the liability of the cost and delay of probate. Now, if you have property in one country or more, if you've got a business registered in another country, and if you've got a personal individual tax resident in a third country, then straight away you've got 3 jurisdictions, 3 separate legal countries, each of which would need a probate administration to settle the estate. And the time it will take to settle that estate is the time of the slowest probate administration. So some countries are much worse than others. The UK is fairly quick, and within 3 to 9 months an estate can normally be settled. Other countries might take 2 years, other countries might take more. But that cost, that delay is compounded by the fact that you need separate probate administration in each jurisdiction. And the people to carry that out can only be legal tax residents of that country. So if you've got assets in 2 or 3 countries, then you're going to have to employ professional help for each of those. How do you manage that? You create a will, you protect your assets, you can use a family trust or family business to consolidate and protect your wealth, protect your income, protect your assets from the cost of delay and probate and the expense to a family of inheritance tax of 40%. ProACT know how to make sure that if you do die, when you do die, that your inheritance passes to your family and not to the taxman. For more information, contact us at proactpartnership.com.
The ProACT Know-How. Brought to you by ProACT.